Welcome back to the deep dive. We always aim to cut through the noise, and today we're looking at something pretty big, a really significant shift happening in crypto investment.
Yeah, it feels like one of those moments where things, start to change properly. We're seeing more regulated pathways opening up.
Exactly. And the focus today, it's the launch of the REX Osprey XRP ETF. It's trading now, ticker 6ARC-APR. This is, it's quite the development.
It really is.
Welcome to everything you need to know about finance.
And just before we really jump in, it's super important we say this. This conversation, this deep dive, it's all for informational purposes. Okay? We're exploring this new ETF.
Right.
But we're absolutely not giving out financial advice. We just want you to understand what's happening.
Definitely. Knowledge is power, as they say. And look, if you find this kind of breakdown interesting, if it helps you understand things better, please do hit that like button and subscribe. It genuinely helps us keep doing these deep dives.
It really does.
So today we're going to get into what this ETF actually is, how its pretty unique structure works, what it might mean for you, the investor, and yeah, the bigger picture implications for crypto overall.
Sounds good.
Okay, so first things first, let's just quickly unpack what an ETF is for anyone maybe less familiar. An exchange-traded fund. Think of it like a basket.
Right.
It holds assets, could be stocks, bonds, or like here, a cryptocurrency. And then shares of that basket trade on a normal stock exchange, like the NYSE or NASDAQ.
Yeah, it's a way to invest in something, say gold or oil, or in this case XRP, without actually having to, buy and split the physical gold or the digital XRP yourself.
Exactly. It's all wrapped up in a familiar, regulated package you buy through your broker.
And that brings us straight to the RX Osprey XRP ETF. It's XRPR. This is the big news. It is the very first regulated U.S. ETF to give investors direct spot exposure to XRP.
And when we say first, we mean brand new. It literally just launched today, September 16th, 2025. We're talking about it almost in real time.
Pretty much hot off the press, yeah.
And the key thing, I think, is just how easy this makes it. You can buy XRPR shares through your normal brokerage account. Think Schwab, Fidelity, Robinhood, whatever you use.
Right, just like you'd buy, say, an S&P 500 ETF like XPY. Or shares in Apple.
No need for setting up crypto wallets, managing private keys, dealing with crypto exchanges. None of that hassle. It really simplifies things.
And it's simplifying access to XRP specifically,
Yeah.
which is interesting in itself. XRP, it's currently the third largest crypto by market cap. It's been around a while.
Yeah, it has quite a history. Lots of debate around its use for payments, its role in DeFi.
And crucially, a lot of history with regulatory scrutiny, legal battles, questions about its status. That whole saga.
Absolutely. Which honestly makes this ETF launch even more significant, doesn't it? Because getting regulated access to XRP in the US has been, well, tricky.
Exactly. That regulatory history is precisely why a product like this, structured the way it is such a landmark event.
Okay, so let's talk about that structure. You mentioned it's unique. How did REX Osprey make this happen? What's the secret sauce here?
Well, it's quite clever. The fund is registered under the Investment Company Act of 1940. Now, that might sound technical, but it's important.
Okay.
It means it falls under a traditional fund regulation framework, the same one many mutual funds use. This is different from how the pure spot Bitcoin or Ethereum ETFs are typically structured, which often fall under commodity rules.
Ah, okay. So a different regulatory pathway.
Yes, and arguably one that offers certain types of investor protections and oversight. It's actually a similar legal structure to the one used for the REX Osprey SLL staking ETF that came out earlier. So there's a bit of a precedent within their own offerings.
Interesting. So it's not just like holding XRP in a vault somewhere.
Not entirely, no. It does hold XRP directly as its main asset. That's key for the spot exposure.
Yeah.
But the structure requires it to also allocate at least 40% of its assets into shares of other XRP-related ETFs or ETPs, exchange-traded products.
An ETF or ETFs, kind of, plus direct XRP.
Sort of, yeah. It's a hybrid model. And to manage all this, it uses a subsidiary based in the Cayman Islands.
Okay, Cayman subsidiary, why do that?
It helps facilitate the asset management, holding different things like derivatives, U.S. Treasuries, alongside the XRP and the other XRP funds. This whole mix is designed to ensure liquidity and meet those 1940 Act compliance requirements.
So it's a way to make it work within that specific regulatory framework.
Precisely. It makes it distinct from, say, a simple proposal to just hold XRP directly, which might have faced different hurdles. And they've also built in a management fee waiver mechanism, which is important. Well, it's designed so that investors aren't effectively paying management fees twice One's for the main ETF, and again for the underlying ETFs it might hold through the subsidiary. It addresses potential double dipping on fees.
Got it. That's a thoughtful detail. So, okay, let's boil this down. For an investor listening, maybe someone who's been interested in XRP but put off by the complexity or the regulatory haze, what's the number one benefit here?
I'd say it's the spot exposure within a regulated wrapper. For a long time, if you wanted regulated XRP exposure in the US, you were often looking at futures products.
Right, which track the price but don't hold the actual asset.
Exactly. This fund holds XRP. That direct link to the asset's performance is what many investors, especially institutions, have been waiting for. It removes that barrier of direct crypto handling and the past regulatory uncertainty.
It opens the door much wider.
Definitely. It potentially brings in a whole new pool of capital.
And you mentioned liquidity, that ETFs part holding other related products, that's meant to help make it easier to buy and sell shares smoothly.
That's the intention, yes.
Yeah.
By having multiple components, including potentially more liquid-related ETFs and treasuries, it aims to provide better liquidity for the 6RPR shares themselves, especially compared to maybe just holding illiquid XRP directly in the early days.
Makes sense. So spot exposure, regulated access, potentially decent liquidity, and just sheer accessibility through normal brokers. Sounds pretty good.
It does offer clear advantages. But, like any investment, there are definitely risks to consider too. We need to talk about those.
Absolutely crucial. Okay, what are the potential downsides or risks people need to be aware of with XRPR?
Well, first up is tracking risk, or tracking error.
Yeah.
Because it's this hybrid structure holding direct XRP but also other ETFs, maybe derivatives, its performance might not perfectly mirror the exact spot price of XRP second by second.
So it could lag slightly or maybe even slightly outperform sometimes, but it won't be a perfect 101 match.
That's the potential, yes.
Yeah.
There could be slight differences over time. Then there's regulatory risk.
Which we touched on with XRP's history.
Exactly. While this ETF is a big step for regulatory acceptance in this format, XRP itself still operates in a space where regulations could change. Future legal decisions or new crypto policies could still impact XRP's value and therefore the ETF.
So the underlying asset still carries regulatory question marks even if the wrapper is approved.
Correct. And related to the structure, you have custody and subsidiary risks. Using a Cayman subsidiary and holding potentially foreign ETFs introduces complexities. Who's safeguarding those assets? What if something goes wrong with a subsidiary or one of those foreign counterparties? It's an added layer compared to just holding US-based assets directly.
Okay, that's important. What else?
Liquidity risk, particularly early on. While designed for liquidity, any brand new ETF needs time for trading volume to build up. In the beginning, the gap between the buying price, ask, and selling price bid, the spread, might be wider.
Meaning it could cost you a bit more to get in and out, especially with large trades, until volume picks up.
Potentially, yes. And finally, management fees. We mentioned the waiver, but hybrid structures can sometimes be more complex and thus more expensive to run overall than a simple single asset ETF. You always need to check the prospectus for the total expense ratio.
Right, always check the fees. Okay, so benefits and risks laid out. Let's zoom out again. What does the arrival of XRPR mean for the broader crypto market? What's the bigger picture here?
I think it clearly signals growing demand, serious demand, for crypto ETFs beyond just Bitcoin and Ethereum. The market, both retail and institutional, is saying, we want regulated access to more of these major digital assets.
Yeah, you can't help but think back to the Bitcoin spot ETFs earlier this year. The launch was, huge.
Yeah.
Billions poured in within weeks.
Absolutely phenomenal inflow. And yes, it pushed Bitcoin's price up significantly, but maybe more importantly, it just cemented its legitimacy in the eyes of mainstream finance. It became investable for many who are sitting on the sidelines.
So do we expect the same kind of massive impact for XRP with this ETF?
Probably not on the same scale as Bitcoin. Bitcoin is the original, the biggest, the first mover with these ETFs. XRP, while large, doesn't have quite that same status.
Right.
But the underlying principle, it absolutely holds. More regulated, easy access tends to lead to more capital flowing in. It broadens the investor base, deepens the market, and that can create stronger demand over time. It's applying that successful Bitcoin ETF playbook to a major altcoin.
And it feels like this could really open the floodgates, doesn't it? If XRP gets one, what's next?
Well, we're already seeing the next step. A Dogecoin ETF, DOJE, is apparently expected to launch in just a couple of days, around September 18th.
Wow, okay. So it's happening fast.
It seems so. And beyond that, you could easily see the market pushing for ETFs based on other major tokens like Solana, Avalanche, maybe others down the line. It feels like the start of a trend.
A whole new wave of altcoin ETFs.
Potentially, yes. And this whole trend is definitely helped by what seems to be a, let's say, more accommodating stance from the SEC recently towards crypto ETFs.
How so?
We saw them approve mechanisms like in-kind creations and redemptions for the Bitcoin ETFs.
Yeah.
That's quite technical, but it's really important for helping the ETFs track their underlying asset price accurately.
Makes them work better.
Yes. And crucially, after that big court decision involving Grayscale's Bitcoin Trust, the SEC did approve the spot Bitcoin and then the spot Ethereum ETF applications. That shift was massive. It basically paved the way for products like this XRP ETF to even be possible.
So the regulatory environment, while still complex, has become somewhat more favorable for these types of products lately.
It appears that way, yes. At least for these major assets within specific structures like the 40 Act or commodity frameworks.
Okay, so wrapping things up a bit. The RX Osprey XRP ETF, SEXRPR, launching today, September 16th. It feels like a genuine milestone. It's offering regulated, accessible spot exposure to XRP for U.S. investors, bridging TradFi and crypto in a very real way.
Absolutely. It's a significant development, opening up new possibilities. But, and it always bears repeating, investors really need to do their homework.
For sure.
Understand the product, understand XRP, understand the risks we talked about, the volatility, the tracking error potential, the regulatory side. Even in a regulated ETF, the underlying asset is still crypto with all its inherent characteristics. Due diligence is key.
Couldn't agree more. Know what you're investing in. So this is happening now with XRP, maybe Dogecoin next. It leaves us with a big question, really, a thought to leave our listeners with. What is the next major altcoin that will get its own ETF? And maybe more fundamentally, how is this continued integration, this sort of Wall Street interpretation of crypto, going to change how we all view and interact with these digital assets long term?
That's the multi-billion-dollar question, isn't it? It feels like we're just at the beginning of another major chapter in how digital assets meet traditional finance.
Definitely something to watch closely. The space just keeps evolving.